RFT Nation, what up? And welcome back to another video. Today we are looking at the NAS100, the NQ, and we are looking at it on the 9th of April 2026, where I was able to profit around 23,000 rand, which is around 1,400 US dollars if you were to convert. Now, today I'm going to walk you and show you the step-by-step process that I took that made me to buy this instrument. So let's get to the chart.
Welcome to RFT Airlines.
Price chart here for the NQ, and I've got some few stuff plugged in here as well with my three most important elements in the market. I've got the timing element, price, as well as the ADR. My trading model is built around these three elements. Now, speaking of the timing element, we already have 9 and 15 here. But my trading time, or my time to start to look for opportunities in the market, start from 15 going forward. That is when I start to look for opportunities in the market when I'm trading the NAS100, the BTC USD, or the USD. I'm starting from 15.30 going forward to look for opportunities. I don't take trade before 15.30. Why? Because that is when the market starts to be active and decisive. That is why you saw me entering here after 15.30. Here, the market didn't hesitate. It simply moved aggressively towards my direction. Easy as that. Because that is when the market starts to be active. Now, let's talk about finding the direction of the market that you are going to take at the right time. Here, most of the time, we are looking for two things normally between 9 and 15. We look for either a continuation or the reversal. You've seen on my previous video, you saw a continuation or the variation of a continuation. Now here, the market gave us a reversal. So what the characteristics of a reversal is, the market will simply open, pick one direction, and then right after that, the market will come in aggressively to oppose that first or that initial movement that it was given. Right here, as you can see, the market opened, drop, and then after that it picked the opposite direction aggressively, which completes a reversal in that case. So once after finding a reversal in this case, means at the right time you are going to continue to the upside with a reversal, move all the way to the upside. But there is no market that will simply open and pick one direction like this. In order for the market to rise or go up, what it have to do, it have to open, drop, and then rises right after that. That's the nature of the market. That is the nature of the market from there. Open, drop, rise, if we have to buy right there. But on this day, things was a bit different. Why it was a bit different? It is because right after finding out and concluding that we are looking for the market to rise, what it did, it simply opened and go higher without us taking us into a trade before you can buy. It simply just went all the way up right here. That is when now there was a need for the ADR, when this thing was reversing back down. That is, it still safe for us to jump into a trade to the upside? Because there are some scenarios where you will find in the market that will simply open, rises, and then go back around where you're supposed to enter from, and then finding out that it doesn't take you, it doesn't respect this. Instead, it simply continue to drop all the way to the downside. That is why it was so important for us to check the ADR for this day. So the ADR here started at 2.34%. This is percentage, 2.34%. So we had to measure it from here all the way to the high to measure if the market has reached the ADR. And then you can see it has not yet reached an ADR because it only covered 0.6%, 0.64%. So that means the market had more rooms to continue all the way to the upside. There were still more rooms for us to buy this instrument. It wasn't over, because if the market here, when it come from this side, had already reached an ADR of 2.34%, it was going to be a different story. We were not gonna retrace and buy. Instead, we were gonna let the market reverses all the way back down, because it will be over for a continuation. It's like the market would have completed its cycle of the day. But since this thing had already covered 0.64%, out of 2.34%, that meant a continuation to the upside was still valid in that case. So that's why it's still straightforward for us to find an entry somewhere there. So this is how we constructed a trade. To buy, place an entry, stop loss few pips below the low right here, and my first TP was around 1:2 risk-reward ratio. 1:2 risk-reward ratio. But for this position specifically, the market went all the way to the upside up until it reaches 1:5.3%. 1:5.3%. Why? If the market has more rooms to continue, it's very safe for you to hold that position. But with caution, you don't just hold and say like, this guy said you can hold if the market still has more rooms to continue. No, don't just say that. You continue, you hold the position with caution. The market was too aggressive in one direction, so there was no need for me to simply just jump out of a trade like that. So I had to hold the position, but making sure that it doesn't reverses me all the way back down and all that. So this is how we're able to achieve 1:5 risk-reward ratio on this position that ended up giving us a profit of around 23,000 rand. So that's how we kill banks.